So, hello, my name's Joanna Tall. I'm a solicitor here in the UK and very excited to be part of this project and speaking to you all today. A little bit about me. I'm a solicitor with over 20 years experience in commercial and IT law. And I started off in the city of London working for high profile law firms and then moved out into industry working for global companies. And then in October 2009, I founded my own law firm called off-to-see-my-lawyer.com. And this is a virtual law firm, so it's accessible online to anybody, anywhere. And its prime target is female entrepreneurs, but this isn't to say I don't have male clients as well. My specialty is advising on everything that makes a business tick. So from your website legality to terms for selling online, drafting tailor-made agreements. I also have a so-called oven-ready document shop where you can find templates that you can download and tailor yourself. So they're oven-ready and very user-friendly. I featured in the press, I'm very excited to say, in the Market magazine, which was a glossy magazine for entrepreneurs set up by James Kahn. I featured in the Financial Times, the Times legal section, a little piece on the new cookie law, and much to my surprise on Radio 4, and also in the Guardian small business section. So very exciting to be out in the press. And in terms of the personal side, I am married with 2 children, and that's one of the reasons I set up Off to See My Lawyer, so I can actually be a mum and a lawyer and enjoy both. And if I do have any spare time, which as entrepreneurs you will know is probably very limited, I love sailing and independent travel to countries all over the globe and speaking different languages. And before we go into the main part of the webinar, just to flag that you will be able to ask questions at the end, and you'll see at the bottom of your screen a special box where you can type in your questions. And I will be looking at those and try and get through of them as many as possible. And I may group some together, but start thinking now about which questions you may want to ask at the end of this webinar. Let's get to the webinar. So the overview, the purpose of this webinar is really going to be to provide you with an overview of the different types of business model that you might have for running your own business, and also making you aware of any different registration requirements that apply in your country. And as I said, at the end, I will just throw in some of my hot tips for making sure you really have got a great business at the end of the day. The webinar objectives, just 3 really, which is hopefully at the end of it, you will understand what your options are in terms of business entity. You will be able to compare the advantages and disadvantages of each business model, and just be aware that there are registration formalities in order to complete the circle. Right, so just running through the outline of what we will be covering, a little bit of an introduction, and then I will be looking at what type of business model is right for you. And this will run through the 3 key models, which is sole traders, partnerships, and limited companies. Then we'll look at the formalities of registering your business, and finally, the good practice tips for running your business. And I'll wrap up with a little summary, and then we'll throw open the forum for some Q&A. And I'm really looking forward to the questions that you'll have lined up for me. So what type of business model is right for you? Once you've sort of been through this chapter, you will be able to, as I said, recognize the different types of model and then apply them to the system in your country, because what I've done is just a real overview, and I'm conscious that many of you are scattered all over the world. So this will be the sort of key denominators of the different business models. And then you will have to check locally with your trade office or chamber of commerce what specifically applies in your country. You'll hopefully also understand the differences between the different models. And then again, as I said, looking out for the formalities to get it all covered. So let's starting at the bottom, and it doesn't mean it's any less important than the next ones, but the most basic form of a business model is the sole trader. And as you can see, this lovely lady with her fruit stand, that would be a typical sole trader setup. She's just on her own. She's sourced all her goods, and she's selling directly to the public. There's no one else involved. And it's a great option because she gets to make all the decisions. She can run the business as she pleases and doesn't need to consult with anyone else before she takes any steps. And this isn't to say that she can't still have employees, so she can employ helpers and people on the side to help her run her business, but predominantly she is the sole trader and the sole owner of the business. And as it says on the slide, you don't need much capital to get started. It's whatever you need to, say in her case, buy the fruit and veg to be sell it on, and to lease the stand and have a space in a shop. So really basic setup, so nice and easy. Some people think there are drawbacks to being sole trader, and I've listed a couple for you there. The key thing is that the business is not a separate entity to the business owner. So this lady will have personal unlimited liability if things go wrong. Say the tomatoes are actually poisonous and everyone gets food poisoning, and they come after her and say, look, I've lost all my earnings because I've been ill and poisoned, and she would have everything at stake, not only her bank account, but they might have to say, oh, she's got a big house, we'll come after the house. And so everything that you own is at stake as a sole trader. That aside, it might also be difficult to raise capital because people think, well, this is just a one-man band. It's not really very credible. So you may have difficulty raising capital or borrowing money. And another curious thing is that if this lady is to die or get injured or so, the business is dissolved on the death of a sole proprietor. So that's the end of that, unless anything else is stipulated. So quite short term. So that's your sole trader. The next option is almost like a combination of sole traders together. So it's called a partnership, or in some countries a cooperative. And I thought this image sort of represented it really quite neatly. So there's this notion of people working together on a common project. And usually people, these ladies, for example, might have all invested in the seeds to grow the lettuces, to buy the equipment for managing the field. So everybody contributes a little bit of a share into the partnership and helps. So this means that your costs of setting up the business are lower because each person's helped you out, and there are usually no formalities in your country, but you need to check this. It's great also if you need money to get started and you want people to help contribute into the common pot. And one thing that's probably quite important is that you get to share the business with someone else, because life as a sole trader or sole business owner can be quite lonely. And so by setting up in partnership with best friends or trusted partners, it can actually be more fun, and you can bounce ideas off people. So it's a great model to follow. But what I would strongly recommend is, and this is totally wearing my lawyer's hat, is you need to make sure you've got a partnership agreement with your partners. And don't see it as something like, oh my God, this is going to be awful and turgid. Look at it, to use the cooking example, as a recipe book. So the partnership agreement may be long, but if a lawyer's done it properly, it will be a recipe book with chapters dealing with every eventuality. So say one of you wants to go off and have babies and drop out of the business, you will have a section on saying, what happens if a partner wants to leave the business? And you will have a proper process to follow, and it won't be like, oh my God, so-and-so wants to leave, everything's going to collapse. So the partnership agreement deals with every possible eventuality, and the key ones are when do we invest extra money in the business? How much do we spend on equipment? And you can set it out and set certain thresholds, and how many people are needed to make a decision. Say there's 5 of you, you may decide for small things, we can all go off and make our own decisions. But if it's a big expenditure, we'll need at least 3 of us on board for this decision. You can also deal with in what circumstances people get to leave the partnership, say pregnancy, illness, death, or if someone just simply wants to stop and move on. So it's a great tool for managing your business. And it also actually helps you address how you will run the business right at the outset, rather than starting off quickly and then coming across various hurdles and thinking, oh, we should have thought of that. So it's a really great tool to ideally work hand in hand with a business plan if you've got one, and hopefully you have. Disadvantages of partnerships are, there are a couple of them. So it can still be difficult to raise capital because people think, well, this is just a collection of individuals, so how stable is it? You know, people may fall out, or it may not go as well. And the second point, again, the partnership is not a separate legal entity from the owners. So if you incur a lot of debt or something goes wrong, every partner takes the hit, and they can come after you personally for your personal belongings and whatever you earn or own in the business. So it's not sealed off from you. And also, if a partner leaves the business, leaves the partnership will automatically be dissolved unless you say otherwise. So that some people get caught out by that, and suddenly the whole thing is folding without them really wanting it to fold. So again, the partnership agreement would deal with that eventuality to stop that happening. So it's a useful, flexible model with a few downsides. Moving on to the next model of business is the limited company, and it may have a different name in your country, but the principle is the same. And the big advantage, which I've sort of been touching on in previous slides, is that the company has a distinct and separate legal personality from its shareholders. So if you have a look at the diagram on the right, you'll see I've got this sort of fictitious company called Great Gifts Limited, and it has a share capital of 100 shares worth £1 each. So that is your separate entity. It's protected, and your customers will be dealing just with that limited entity. Who's behind it? Well, we've got 3 ladies who've decided to create this company. You'll see Betty at the top. She's contributed £25, and in return she's allocated 25 shares worth £1 each. So she literally will get a share certificate, having sent the money by bank transfer or whatever into the company. Then you have Sevi. She's given £50 and she gets 50 shares. And on the left we have Sandeep, who's also contributed £25, and she's got 25 shares in return. So the 3 shareholders are separate and protected from the company. If the company goes bust or something happens, all they will lose is the money they've contributed into the company, and people can't come after them personally. So a lot of people favor that as a model because the limited company protects them and their own families and their personal belongings. So as the second bullet point says, the liability of the shareholders is limited to their shareholdings, and that's a really great thing. And if they want more money, they can always contribute more and possibly get more voting rights, because usually the voting rights for making decisions in the limited companies follows their shareholding. So Sevi, for instance, has 50% shareholding, Betty 25%, and Sandeep 25%. So you need to be careful what percentage you contribute if you want to be controlling the decisions that are made in the company. Unlike partnerships and sole traders, the company isn't dissolved when people die or leave. It will carry on. So that's a great plus point. And what you would usually have, similar to a partnership agreement, you'd have a shareholders agreement, and in that you would say exactly what happens if somebody wants to leave or dies, because the vital thing is you want to control what happens to the shares. Say Sevi wants to go off and start a family, She may want to give her shares to her friend down the road who's thinking of setting up a competing business. So you absolutely don't want that to happen. So you would say in your shareholders agreement, if you want to leave the company, fine, but first of all, you have to offer them to us and give us the first right of refusal. And then if the company doesn't want them, you always have the option to say, okay, sell them to your friend or your parents or whoever. So critical to have that agreement in place. Another plus point is there may be tax advantages in setting up a limited company. And this will depend totally on what but I suppose two things. One, the personal circumstances of yourself in terms of whether you can take dividends or not. And secondly, the regime in your country in terms of how you can legally withdraw the profits from your company. So check with your local tax advisor in terms of whether it actually makes sense for you to set up a limited company. And the last great plus point is credibility. You know, people will most likely take you more seriously if you're a limited company because it means you actually mean business. You're going to go to the trouble of registering it and being on a public register. So it does carry more kudos. So you may be able to get bank loans and people will feel happier that they know exactly what kind of entity they're dealing with. Disadvantages there are some, but again, it depends on what's best for you. The first one is some people dislike this close regulation by the laws of your country when you have a limited company. Such things as filling out forms every year, you have to pay registration fees, and sort of leading into that, into the second point, is that your personal details and your accounts will usually go on a public register, which anybody can have access to. And the reason being, and it makes sense, is that, as you know now, the liability of a company is literally limited. So if you go incurring masses of debt and actually you don't have the funds behind you, you're risk defrauding people or just ripping them off. So anybody who's doing business with you will actually want to check out the register and see, right, how many people actually involved in this company? Does it actually have any profits or any cash in bank, or is it just hanging in there by a shoestring? So that's the reason why your accounts will be in a public register. I mean, it's not completely public. People will have to pay a fee to get an extract to see who's there, but it is essentially public. One thing to note is that there are limited circumstances when the so-called corporate veil can be lifted. And what I mean by that is, if you look at the example on the diagram, Great Gifts Limited, imagine a sort of protective circle around the business. That's your corporate veil, and it's protecting the shareholders from any liability. But there are circumstances where this veil can be lifted and people can go after the shareholders, but those are primarily where there's sort of cases of fraud and really underhand tactics have been going on. They say, right, actually, this has all gone a bit too far, and these guys behind the company are doing this deliberately, and they will come after you. But certainly under English law, those circumstances are rare, and the principle is that a limited company does protect you from personal liability. And the final point is, some people feel there's less financial freedom when you have a limited company, because you think, great, all this money is coming in, I'll just go off and maybe have my hair done or buy a new suit for the business, for the next meeting. There are strict rules on what you can spend your money on, and the bottom line is it has to be on company business. And certainly in the UK, if you incur business expenditure, it has to be wholly for the business purpose. So a suit, even though you think, well, I only use it for business, it actually is there to keep you dressed and decent. So that the taxman will say, no, that's not allowed. So you can't spend your money as freely as you would like to. And some people see that as a disadvantage. But if you have a good accountant on board and you familiarize yourself with the rules, you can operate perfectly normally. But this isn't to say that you can't pay yourself a salary, and you can also withdraw profits from the business in the form of dividends. So those are the two main ways you would get money out of your business, and your accountant can advise you on what proportion to pay yourself a salary and what proportion needs to be dividends. But it's a very tax efficient way normally of getting money out of the company. So moving on to looking at your country's local requirements in terms of formalities. For a sole trader, usually there are very few formalities, and that's one of the big plus points. You can literally set up, have your own business name, and usually you would probably want to check online, do some Google searches to make sure nobody else has the same name as you, because you will get into deep water with them unless it's completely dissimilar business. But do check your local yellow pages and Google for any similar business names. The formalities for partnership, again, very few formalities, especially or particularly in the UK, but I imagine it's similar in your country. But do check with your local country trade office or chamber of commerce. And if you just do a simple Google search and put in business registration requirements or partnership plus formalities and see what comes up, and you should be led to your local business office or trading standards office. All of these people can help you. Even citizens advice bureaus, they're a great source of help. In the UK, we have a lot of these, and they're free bureaus that you can go to and ask them for free advice to get started, and they'll be able to point you in the right direction. Limited companies, as I mentioned, they do have a few more formalities. And in terms of setting them up, you can either set the company up yourself, and I'll come to that in a minute, or you can buy a so-called off-the-shelf company. And this is one that's been formed already by a company formation agent. There are people who have that as their own business. They just sell ready-made limited companies, and they're all incorporated, and they'll have really sort of boring names like 123 Limited. And so you buy that company for, say, £100 or around about that fee, and you have a ready-made company, and all you need to do is change the name to the business name that you want. Excuse me. So it's a very nice and easy way of getting a company up and running very quickly. If you think, right, now is the time, I don't want to wait for the registration papers to go through, just buy your off-the-shelf company. If you do want to do it yourself, it's not horrific. If you want to look at an example in the UK, we have the Companies House, which regulates all limited companies, and you can do it online yourself, and it's very well explained and intuitive. So don't think, oh my God, this is going to be really tricky, or I need to use a lawyer for this. It is very straightforward. And usually the process is, as set out on the slide, you have to pay a registration fee to start with. You complete registration papers, which will usually be personal details about you and the directors, where you live, and the name of the company, and where your principal place of business will be. Sometimes you need to have a minimum number of shareholders. So thinking back to that diagram I showed you, you may need at least 2 people to contribute to the company. And you need to have a registered permanent address. And usually you can't just have a PO box, certainly in England, because, as I explained earlier, the idea is to be transparent and to know who you're dealing with. So if you're hiding behind a PO box, that doesn't look very good to your customers, and is usually not allowed either. Sometimes you have to invest a minimum amount of capital in the business as well to get it up and running. And again, you need to check your requirements in your country. And sometimes you need to have a national identification number from the Ministry of Economy. That's certainly the case in African countries. So those are really, as you see, not overly onerous registration requirements, and you can get it done pretty quickly. In our country, you can have a standard process, or you can ask for an expedited incorporation and pay a little bit extra. So there's usually options for the sort of normal and fast track option. The next point you need to check, and that's probably regardless of whether you're a sole trader or a partnership or a limited company, and that is to register with your local tax office. You may already be registered as an individual, but you need to register your business as well. And in the UK in particular, and this is the thing to look out for, you have 3 months to register your business. And some people do get carried away and they're operating as a sole trader and think, well, it's just me, it's the same thing. But no, you need to register your business as well, and within a certain time limit. So do be careful that you are complying with the time limits for letting the taxman know. And with that, it does mean declaring your earnings. So I would strongly recommend getting an accountant on board, or at least familiarizing yourself with what the rules are for what you can earn, what you can spend your money on, and really don't sort of try and wing it, but really be professional about it. And one thing I use is a accounting software package, which means that my accounts are in the cloud. I can log in and see them from wherever I am. And also I can allow my accountant to have access to this. So it means I don't have to send papers back and forth or worry about them getting lost in the post. It's really user-friendly, and these accounting packages usually have lots of help notes which tell you what you can and can't declare and what expenses count as which categories. So if you can at all, set yourself up with really strong foundations and get the accounting side set up at the outset. And what it will also do, at least my package does, is you can send invoices to your customers. And so you will gradually build up a database of all your customers. You can see if they pay on time, how much you've actually sold to one customer. So it's not just an accounting tool, but also a business tool to help you see, right, this customer is actually spending a lot with me. I need to be looking after them and really giving them a great service. And you'll see others who are the late payers. You think, actually, we can just let those be for one and not really spend too much effort on them. So don't forget the accounting side. And then lastly, if you're involved in a sort of specialist area, and by that I mean your business involves things which could be risky, such as food, drink, or medicines, or your customers are children or other vulnerable individuals, you need to check if there are specific requirements that apply to them. So to take the food example, you will probably have to have specific conditions in which you prepare the food, and that will need to be checked out by your local trading officer. You'll need to label your packages with specific information about the ingredients and give any warnings about allergies. So don't forget to check out the actual specificity around what you're selling. And again, your local trading standards officer can help you. We have a lot of these dotted around the UK, and they used to be seen as more sort of law enforcement agencies, but lately they've come around to being real hubs of information. And I'm sure in your local countries as well, if you check out trading standards, or even say you're involved in foodstuffs, check out food labeling requirements and see what comes out, and that will direct you to your local business office. So yeah, make sure you check what you're selling and what's required around it. Moving on to the next slide, I've just picked out a couple of examples because I know there may be quite a lot of you in these two countries, and so I thought I would do a bit of delving myself and learn something on my part. So in India, interestingly, the minimum capital you need for a limited company is 100,000 rupees. So that may be a barrier to some of you, or you may think, okay, that's what I need to raise before I even go down the company registration route. In India, you also need two members for your company, or even one if it's going to be a one-person company. So that's great news if you don't particularly want to set up with somebody else. But you will need 2 directors. And you'll see there on the slide, I've put the links for where you can find out more about formalities in India. So mca.gov.in or india.gov.in. And this is the portal for all of the authorities. And then you drill down to the particular area that you need. In Nigeria, registration of all companies is handled by the Corporate Affairs Commission, and I've put the link there for you, cac.gov.ng, where you can find out a whole host of information. And there, the minimum paid up capital is 1 million shares. So good luck with the maths on that one in terms of divvying that lot out amongst your shareholders. And you get to choose, in terms of naming your company, you get to choose 3 names, and then the CAC will see which name is available and let you know if the one you want is suitable and unregistered. And then you get given that name. And once you have the name, you then have 60 days to complete the whole registration process by filling in and filing the form. So again, nothing overly difficult, and I think something all of you can manage. And now, this slide always makes me laugh because I think sometimes we all feel like this when you're running a business, and you think you're overworked. Well, this poor old donkey is really in not a good way. So these are my like good practice tips for running a business. And the first one may surprise you, but it is to go out and treat yourself to a shiny new folder, which you will be keeping all your contracts in. And a lot of people just fail to do this at the outset, and that's why I'm really passionate about this step. Because if you want to run a truly professional business, and if you want to sell it on ultimately and make a vast fortune and sail off into the sunset, any buyer will say, right, where are your contracts? They will perform a so-called due diligence exercise where they will literally crawl over the whole business, and they will want to see all your contracts. And if you turn around and say, oh, actually, it's all just based on a handshake with everybody and you're winging it, they will be walking away pretty quickly and saying, oh, this will be too much effort. So start with a physical folder. It doesn't, enjoy the experience and think, right, this is my step number 1 to being professional. And what will you put in that folder? Well, tip number 2, which is the contracts that you will have with everybody in your business. And I really do mean everybody. So draw a list of everyone that you do business with, whether it's customers, your subcontractors, employees, suppliers, people supplying stuff into your business, which you will in turn be selling out. Make a list of every single person you deal with, and then make sure you have a contract with them. And you may say, well, okay, what is a contract? I don't really know what on earth that is. Well, make sure it's in writing for starters. And then as a basic principle, and I know this is centered around English law, but it will be pretty much the same in your country. And that is, you need 3 key ingredients, which is an offer, an acceptance, and then the price for the promise, as they call it. So that price can be either actual money. So say I offer to sell you guys a crate of oranges. That's my offer. You guys say, yeah, I'd like that. And the price will be £10. I accept it. That's your contract, and we can write that down, and it's as simple as that. What I thought, I would give you a few more ingredients than just those 3, and so you'll see on the slide I've put down some key terms that should be in any contract, and this is by no means the only things, but these are the absolute basics which I would recommend you have. So the first point is the parties to the deal. And you'd be surprised, a lot of people actually get this wrong. They either get the name of the party wrong, or they don't put in an address. And so you really, as a bare minimum, need the other side's name and full address. And to go back to the previous point, if you're dealing with a limited company, I would recommend you quickly search in your local register and double check that the name is correct and that the address is as they say it is. So you can tell immediately if you're going to be scammed, because you may find out actually this company doesn't exist, or the address is somewhere completely different. So do that little check first. Second point is decide how long you want to be dealing with this person. So that's the term of the contract. Is it just for a few months or a whole year? Will it renew automatically? Decide how long you want to be in business with the other person. Third point is set out in detail the goods or the service that you will be providing, and be really geeky or nerdy on this point. Imagine your worst ever customer coming through the door and complaining about everything. So you want to be able to say in exact detail and say, to go back to my creative oranges example, these are oranges from Valencia. They are without seeds. They are suitable for making marmalade only. So if your awkward customer comes through the door and says, I was actually going to juice it and it's just horrific, there's no juice coming out and you have all sorts of headaches, if you can go back to your specific description and say, well, I did tell you they were just for making marmalade, you can relax and that customer can go away. So be really detailed about the goods and services. And also to say, don't forget to mention anything your customer needs to do. So say you're providing IT consultancy, you may want to also specify that in order for you to provide your service, they have to provide a clean working environment for you to come and visit their computer. Everything needs to be working and safe. So remember to specify the preconditions in order for you to do your job. Next point is set out the price to be paid, and you'd be surprised also that this gets forgotten, especially the detail of when and how you want to be paid. So you can say, I want to be paid within 14 days from the invoice date. Or if you're doing a longer project, you can split it up and say, okay, I'll have a third down payment when we sign the contract, another third when I've delivered the goods, and then the final third once your customer's happy with it. So you can break it down. There's plenty of flexibility there, but the key thing is to get it down so each party knows what to expect. Next point is, and this ties in really with the term of the contract, and that is, how can each party get out of the contract? You as a supplier may want to say, if they don't pay you on time and a real pain in the neck, you can send in the notice to get out of the contract and say, right, actually, let's call it a day. You can specify other circumstances, like simply you want to get out for no apparent reason. So you just say, okay, both of us can terminate on 1 month's notice. That's perfectly acceptable as well. So just think about getting out of the contract and under what circumstances you want to do that. And you can also look at past relationships you've had when you've had difficult customers. Think, actually, that would actually be a good round to end a contract. So think of all the awkward customers you've had and build them into your terms going forward. Next little point is just set out which law applies. And so in my case, for example, I say English law applies to all my contracts because I know that law and I know which framework I'll be operating in. You may choose your local law, or you can choose a neutral one. If you're doing cross-border transactions, you may choose Swiss law or a neutral place that both parties will be happy with. And last but not least, make sure people do sign on the dotted line and date the agreement. And there are some great software apps that you can use as well. If you think, oh, this is going to be such a headache, people printing off contracts and then having to sign it physically and then post it back. One thing I use is the Adobe EchoSign software, which is fantastic. So you save your documents as a PDF, and then using the software, you can email it to your customers. It comes with an email saying, Joe's just sent you this contract, please sign in the box. And they literally scroll down to the box and can insert their signature digitally just by typing it in and dating it. And it gets saved, and then both parties end up with a signed valid copy. So it's tremendously easy. So look out for any apps that are out there, and it will make your life really easy. And it won't sort of then be a hindrance, people saying, oh gosh, contracts, I'm not going to bother. You know, they have absolutely no excuse to sign on the dotted line. And tip number 3 is, if in doubt, speak to a friendly lawyer before you start business rather than waiting for things to go wrong, because people typically think of lawyers, you know, with wigs and gowns in court and, you know, for fighting a case. But really, and certainly my business is to advise people as they're setting up before they really go live, and it will just pay you dividends and actually save you hundreds, if not thousands, in legal fees. Because I've got plenty of entrepreneurs who come through my door say, I should have listened to you, but I was just so excited. I went ahead and now things have gone really pear-shaped and they end up spending thousands having to put things right. And sometimes, they've lost a lot, like their intellectual property or their branding, because they thought, oh, this person can help me. And then that person disappears off into the sunset and copies their ideas, and they have absolutely nothing to go by because they haven't had a formal agreement with that person. So don't be frightened of speaking to a lawyer sooner rather than later. And most good lawyers will offer you 30 minutes or 20 minutes free time right at the outset to just discuss where you're going and then say, okay, this is what you need next. So do it sooner rather than later. So to summarize, hopefully having been through this webcast, you are now able to understand the options that are available to you in terms of business model and business entity that you choose. But of course, please check locally what the options are. I hope I've also given you an idea of the advantages and disadvantages of each business model. You should realize that there are registration formalities for each type of business, including the taxman and maybe ones relating specifically to your area, such as in food or medicines. And the last point is knowing basic contracting principles and hopefully, have a really brilliant business built on solid foundations going forward. So thank you for your time. And that's my little logo at the bottom there, Legal Mary Poppins, and off to see my lawyer. But feel free to, I advise on English law, but seek out your local Legal Mary Poppins. Thank you very much. And any questions?
Right. Well, I hope you found that informative. We have got a couple of questions which I shall work through. And they are as follows. We have a question, well, there are two I might actually link together. We have Helen from Uganda who asked, how best can one partner with someone who has professional skills when they themselves do not have the skills in equal measure, but they have the facilities for selling and the equipment for production? I think that is a perfectly possible arrangement, and as sort of explained in the webinar, you can have an agreement, whether it's a partnership agreement or a shareholders agreement, and that is where you would spell out exactly who will do what. So one person will do the professional element, and the other person will be responsible for selling and equipment production. So as long as you record it in your agreement, yes, it is possible to marry various skills together. And linked to that one was a question which was, I am into business networking events for women entrepreneurs and would like to partner with women running businesses in my network and do not know which model to adopt. Well, again, it really depends how big and established a partnership you want to create. You can go for a straightforward partnership model where you, and also really, I suppose it depends how long you want to be in partnership. It may be just a one-off relationship, in which case you'll have a short agreement saying, for this occasion we'll work together to achieve X. Or you may want a longer partnership with a full-blown shareholders agreement or a partnership agreement. Or if it's, especially in networking, you may want to consider the franchise model where you think you've got the perfect model set up yourself and you'd like to license other women to run similar networking events following your model. And that's where you'll need to capture specifically what's unique about the way you do business, and then really capturing that in a license or franchise agreement, as they're called, so that they are allowed to use your model, and in return they will pay you a royalty and maybe an upfront license fee. Another question that's come to the panel is, can business models also be referred to as types of company? I think you're possibly getting the two concepts confused. What I'm referring to as business model is the type of entity. So whether it's a limited company or a partnership or a limited liability partnership, you have all sorts of types of business model. Not to be confused with business plans, which is a plan that you draw up at the outset, really before you even started your business, saying, right, I'm going to go into, let's say, jewelry making. You'll draw up a business plan saying, okay, what's the jewelry market like? Who are my customers? Who are my customers going to be? Excuse me. Are they going to be large retailers or individuals, high net worth individuals? So you go through all aspects of your business and work out the pros and the cons. You do a so-called SWOT analysis if you've been doing business studies, and that is what the business plan is. So not to be confused with your business model. And this ties in quite neatly with a question from Ramatu from Nigeria saying, why do we need a business model? And that is, assuming you're talking about business plans, this is in order to really think the whole idea through from beginning to end and think, what's really great about it, what can go wrong, and more importantly, set yourself objectives. So you may say, okay, I want to have made $10,000 by the end of the year and employed 2 extra people. So if you've got clear goals to achieve, then you can also measure your success and also measure if it hasn't gone wrong. But without a business plan, if you're just sort of, say, take the sailing example, sailing with no particular course in mind, you won't really know whether you've achieved your objectives. Another question we've got from Ramatu, which is a limited company the same as a limited liability company? And the answer is probably yes. There are various interesting different names to give to them, but essentially it's the limited concept that I outlined in my webcast. Another question from Helen in Uganda, I think it was, how do I know what taxes to pay? And I had a quick look. There is the Ugandan Revenue Authority, and their website is www.ura.go.ug, and they have all sorts of tools online, a tax assistant and tax tools, where you can ask exactly what tax do I have to pay, and tell them what you're planning, and they'll get back to you. So I hope that's useful for you. The questions are coming in thick and fast, and I'm afraid we do just have 15 minutes. So do feel free to use the forum as well from this webcast, where you can sort of continue the discussion. But I'm going to try and still fit in a couple more. A further one is, many thanks for a well-packaged presentation. Could you please expand further on minimum paid-up capital of 1 million shares in Nigeria? What does this mean? So that really means that in order to set up a limited company, you need to have that many shares in your company. You can't just start with 1 share because that's simply not enough. So it's really making sure that companies have, because people will in effect be paying that money in return for a share in your business. So it gives people reassurance that there is at least 1 million shares behind it should anything go wrong. And that ties in nicely with another question from Omolulu. Omolulu. Apologies if I haven't pronounced it correctly, your name. Which is, what is the rationale for distributing shares in a new company? And the reason is it's in order to usually get money into your company. So say you're starting out on your own and you've got maybe £100 to contribute, but you actually want to have £1,000 because you want to buy equipment for your business. You need office stationery, a computer, so you need money to come in. So one way is you say, okay, I've got some people that I quite like. and they're interested in helping me, you can offer them shares in your business in return for them contributing money. So for every pound that they contribute, say, you give them a share. The disadvantages is that they may end up having voting rights and running the company, and this is what happens with some major investors. You may have watched Dragon's Den in the UK, where they have a panel of very wealthy individuals investing in startups, but the danger is that the startup may lose control to the investor because they're saying, okay, I've given you all this money, I will be calling the shots. So you need to think carefully who you distribute shares to, and without getting into too much detail, there is one option where you can give people just an entitlement to dividends with their shares, so they don't get to vote and interfere with the running of the business. They just get some profits as and when profits are available. So that's a useful option if you want to consider that. But the bottom line is, yes, you distribute shares in order to get money in. Another question, we've just got a few more minutes, which is, may I know if there are special registration modalities for not-for-profit or social enterprise outfits? I'm afraid it really would depend on the country that you're seeking to register it in, I'm afraid. But you may have a sort of charitable route, but I'm afraid I can't really go into detail there. But do check locally with your company's register, and they'll be able to advise you. And a few more questions we have, which is, yes, and that was a similar one from Betty in the UK, who was asking, what is the best model for a social enterprise? Again, in the UK, many that I know are limited companies, and that chiefly is because they want to limit their liability and not expose themselves to any kind of risk. You can also have companies limited by guarantee, which is quite similar, and also has the effect of protecting you. So the question from Manisa in Malaysia, which is, how long should a company wait before changing its business model? I think that's really on a case-by-case basis is the answer. If it's going well, don't change it. But if you think, and usually these changes are driven by tax considerations, so if you suddenly think, actually, I'm better off taking my profits as a salary and dividends because ultimately I'll be saving money, then that might be a reason for you changing from sole trader to limited company. So it's really, the answer is to sort of keep an eye on the tax as you go along, and work hand in hand with your accountant and get them to do a sort of periodic review of how you're doing. And they should be able to tell you, actually, now is a good time to change from one to the other. I'm just checking. We've probably got 2 more minutes if anybody wants to add any questions. One here coming in about common mistakes. A question from Rena Lynch. What are some of the most common mistakes new entrepreneurs make? That's probably going into my last slide, which is really just starting off without an agreement at all and thinking, actually, that person's really nice. I'm sure everything's going to be fine. I'm afraid it isn't. And one example I had was a lady who'd written an accountancy ebook, and it was a really popular book, and she did a deal with a big company who wanted to license the ebook. And she actually had an agreement with them, but the big mistake she did was not to actually read it. And what happened is that after a year, the company carried on selling the ebook and making masses of profits, but stopped paying her a royalty. And so she said, well, hang on, this isn't right. And they said, well, the agreement's come to an end. And by the way, you actually gave us full ownership of the ebook, so we can do with it what we like, and it's not yours anymore. And so she did literally sort of come crying to me saying, what can I do? And I said, I'm really sorry, but you've actually signed over the rights in your book itself, so there's very little we can do. So mistake number 2 is actually having an agreement, but then not reading it. And as I say, do see a lawyer sooner rather than later, because it really is cheaper than trying to extricate yourself, or even, you might just lose something permanently, such as your intellectual property. So do have an agreement, do work with your lawyer. Other mistakes are not protecting your intellectual property carefully enough. So remember that ideas can be protected, even though they may just seem they're up in the atmosphere. You can protect your ideas as well. So I'm very conscious not to run over time. So I'll just say thank you very much for attending this morning, and I hope I've given you lots of food for thought. And any questions, do get in touch. Thank you very much.